The USD is about to end the week in the reds against its counterparts. On a fundamental note, we note that the White House released a statement outlining the potential risks of a default. Following on last week's report, the White House outlines in the event of a protracted default that, unlike the Great Recession and the COVID recession, the government is unable to help consumers and businesses. Further fueling fears of a US default could lead to the greenback further weakening against its peers as we're near the X date. Furthermore, we highlight the fact that yet another US bank has collapsed this week, and Pacific West Bank Corporation and First Horizon throw punches as to who will be following. On a monetary note, we highlight the FOMC's decision to hike interest rates by 25 basis points, with heavy emphasis being placed on that the Fed anticipates that some additional policy firming may be appropriate, implying that the Fed may remain on hold during their next meeting. Bloomberg has claimed that Federal Reserve Governor Jefferson will be nominated to replace the vice chair slot previously held by Brainerd, whilst economist Adriana Kugler would be nominated to fill an open board slot. On a macroeconomic level, we note the release of the US core PC rates on March last Friday, implying that there is still high inflationary pressures persisting in the US economy, which may lead to future rate hikes as the core PC rates remain stubbornly high. The pound is about to end the week stronger against the euro and the dollar, yet lower than last week's close against the yen. As the UK prepares for the coronation of King Charles III, on a monetary level, we highlight BOE Governor Bailey's comments on Thursday, where he implied that as a result of high interest rates, the probability of defaults has increased for the near future. The statement could be interpreted that the BOE decided to remain on hold during next Thursday's meeting, yet GBP/OIS implies at the time an 87% probability for the bank to proceed with another 25 basis points rate hike. It's characteristic of high inflationary pressures in the UK economy that the headline CPI rate for March, despite slowing, managed to remain in double digits. This may place support for BOE's aggressive rate hike policy as traders turn their attention to next week's preliminary GDP rate for Q1 as an indication of economic impact that BOE's monetary policy tightening has had. Should the bank hike rates by 25 basis points as expected and maintain a hawkish tone in its accompanying statement, foreshadowing more rate hikes to come, we may see the sterling jumping. JPY is about to end the week in the greens against the common currency, the pound and the greenback. Overall, the JPY may be experiencing temporary support against the greenback as the banking crisis saga continues, with Pacific West Bank Corporation being lined up on the firing line. BOJ Governor Ueda, during a luncheon in South Korea, stated to the press that Japanese banks are likely to be immune to the financial turmoil in the US and Europe, as Asian banks have ample capital bases. This could be perceived as a slightly hawkish statement that the BOJ under Governor Ueda may play a more dominant role that is independent of its traditional allies, and as such may set the BOJ on a new direction in the future. On a macro level, we note the relative quiet week enjoyed by JPY traders, as these are a number of public holidays this week. Given the lack of high-impact financial releases from Japan, we may see fundamentals leading the way, concluding traders should be wary and pay attention to the banking situation in the US, as the JPY may experience safe haven inflows during the increased market worries. The common currency is on track to end the week weaker against the pound and the yen. However, it appears it will end the week stronger against the dollar. Fundamentally, we note the escalating violence between protesters and police officers in France as the strikes continue in one of Europe's largest economies against the government's decision to raise the retirement age. On the monetary front, we highlight the 25 basis points rate hike of ECB on Thursday, followed by ECB President Lagarde's press conference in which she stated that underlying price pressures remain strong, opening the possibility for further interest rate hikes. Also, President Lagarde indicated that there was discontent between policymakers, with some favoring a 50 basis points rate hike, which was underscoring the hawkish prospect of the bank. Also, the following comment in ECB statement that policy rates will be brought to levels sufficiently restrictive seemed to underscore the bank's hawkish intentions. On a macro outlook, we note the Eurozone's HICP rate ticking upwards on Tuesday, implying that inflationary pressures are still high in the Eurozone, strengthening the case for future rate hikes by ECB. They also recouped the ground that was lost against the US dollar last week by ending this week in the greens. On a fundamental note, we give emphasis to key players in the Pacific theater as the US-China relationship deteriorates, considering the recent report by Financial Times that US-listed options that track Chinese stocks have more than halved since hitting a record last November. This may provide some indications that the deteriorating relations between the US and China are affecting investors, which may in turn affect the Aussie due to the heavy reliance of the Australian economy on the demand for its exports by China. Hence, we highlight the release of China's trade data for April, especially the import growth rate on Tuesday. On a monetary level, we note the surprise 25 basis points interest rate hike by RBA on Tuesday. As a result, the Aussie gained following Governor Lowe's accompanying statement, which stated that inflation in Australia has passed its peak, but at 7% is still too high. In addition, the RBA's forward guidance stated that some further tightening of monetary policy may be required to ensure that inflation returns to target in a reasonable timeframe, which maintains an element of hawkishness in the bank's intentions, thus further supporting the Aussie. The loonie strengthened against the dollar for the week. Fundamentally, we note that Canada's federal workers have struck a deal with the government on Monday, effectively ending the country's largest ever public sector strike. This may further inspire confidence in the Canadian economy, and as a result, may be translated into support for the CAD. Also, we note the merger between one of Canada's largest banks, Toronto Dominion, and US-based First Horizon have been called off, spiking renewed banking fears. Given the loonie's second nature as a commodity currency, it remains highly sensitive to the market sentiment as it is considered a riskier asset. On a monetary note, BOC Governor McClellan indicated that the bank is willing and able to increase interest rate if needed, allowing for the prospect for more rate hikes in the future, which may support the loonie. On a macroeconomic level, despite Canada's trade data for March coming in higher than expected on Thursday, loonie traders remain spooked by Canada's preliminary GDP rate for February coming in lower last Friday. Therefore, traders now await April's employment data due to be released later on today, which may alter the CAD's direction. Lastly, we note that WTI temporarily dropped below $65 per barrel this week, which weakened the CAD given its predominant export product being oil. Thus, as liquid gold's price declines, so may the CAD. As a closing comment, banking fears have made their way to the surface, with the US equity sector bleeding as market wars intensify. Hence, we continue to highlight that stock market traders will have to navigate between next week's US CPI print and the University of Michigan consumer sentiment for April and May, respectively. We note some support for companies who beat the market's expectations, such as Pfizer and Starbucks. When it comes to next week's earnings, we note on Monday PayPal, and on Tuesday we note Airbnb. Lastly, on Wednesday, we note Walt Disney. Finally, we note that the weakening greenback has been reflected also in the shiny metals price, as gold printed new all-time highs on the heels of banking crisis in the US. The uncertainty in US yields may have also been reflected on gold's price, as the relative deterioration in US yields may be further support for the precious. We hope that you found this report useful, and from all of us here at IronFX, best wishes for solid trading.
Everyone, in today's video we're going to look at expert advisors. Expert advisors are computer programs that run on the MT4 trading platform. By using algorithms, EAs are able to monitor and trade financial markets. Basically, EAs are used to automate trading and find opportunities. You can program the software to initiate and execute trades for you by using the parameters you set. For example, you can use an EA to monitor a few key markets. The expert advisor will alert you when it finds a potential opportunity, and you can program it to carry out trades for you and open multiple positions every day. However, there are some benefits and disadvantages that you should be aware of. As trading is automated, an expert advisor removes the emotional factor from your trading. This means that your fear of loss or greed for more profit will not affect your trades. EAs can reduce stress levels because it takes away the anxiety of trading. Therefore, you can set your trades for the day and do other tasks instead. An EA can run on any market that you can trade with MT4, taking lots of information into consideration, such as price movements and news announcements. Our brains are not fast enough to match the speed of an EA. One disadvantage of expert advisor is they cannot respond to real-time news. They basically ignore factors that cannot be programmed into them. If you are at your computer monitoring the news, you can avoid making a trading mistake after a news release, but the EA will keep trading if it's set to do so. Even though the EA can deal with more variables at once that humans can, it can only act in the way it has been programmed to. There may also be times when you need to interrupt the EA to avoid a big trading error or take an opportunity. Whether you use a third-party EA or create your own, it's important to backtest it over various timeframes in a demo account before using it on live markets. A demo account does not risk real money and lets you see how the expert advisor performs for you. You may find that it works well for you on some currency pairs, but not on other pairs. Simply do your research before committing to using an expert advisor. There are good EAs out there, and some traders achieve year-over-year gains using an EA that trades automatically. Thank you for watching.
Okay, so today webinar I'm going to talk about multiple moving average strategies. Okay, but before I go to the presentation, just want to highlight some of you might be interested in our VIP room. So what you can do, you can just register. Okay, and then there is minimum deposit. You can see bronze 250, 1,000 or 2,000. So it depends on the tier, and then you will get to access to our VIP room. Okay, so how it look like? It's gonna be something like this. Okay, let's say if you have any question, you want to like talk with me and with the team. Okay, let's just talk about goal like okay, let me click and show. For example, you want to find, let's see, the entry, or you want to find a support and resistance, right? Actually, you can draw something like this. Okay, and maybe some of, for example, I draw Fibo, for example, and then you just might say like okay, like at, maybe I just put like Desmond first. For example, let's say hey Desmond, can you help, oh, okay, can you help me to check my let's just say support and resistance level. just something like that. Anything you want to ask me and the team, okay? And maybe you just highlight here, okay, and then you just link object, and then you click somewhere here, and then you just confirm. So when you send in to me, okay, I will get the chance to highlight and then to see like which level are you talking about. And also our VIP service, we do send kind of trading idea. If me and the team we find some good setup, we will send to the VIP room as well. Okay, so it's something like this. Okay, just if you already have the account, and then you already have deposits at least 250. Okay, and you can just maybe let the IronFX know, and then you can join our VIP room. Okay. Okay. All right. Just let's start with webinar today. Like I say, today topic is gonna be multiple moving average strategies. So again, disclaimer: the information in this webinar should not be considered investment advice or any investment recommendation, but instead just educational material only. Okay, if you want to do the own trading, just do it diligently. All right. Okay, so it's about myself. My name is Peggy. I'm a trade analyst and a prop trader. At what is it? Can you see me? Okay. Um, at the Every Fortune Group. Okay, so I do trade a prop trader trading as well. Okay. So today agenda. Why is that clicking? Movie? Why? Sorry. So today agenda, I'm going to talk about what is multiple moving average strategies, how do you use it, and how you can improve on it. Okay. So today strategy I'm going to talk about is the GoP multiple moving average strategy. Short form is GMMA, is Daryl Goofy. Okay, so he's an Australian guy. He is the one who created this technical indicator. Is quite simple to use. If you want to find like support and resistance or crossover, how to get the entry, buy and sell. Okay, which is I will going to talk a little bit later. Okay, so just a little bit about GMMA. They are using moving exponential moving average, which is EMA. Okay, so sorry why it's not moving. Okay, so there are two type of moving average. So in the screen you can see that the green line is a short term, and the red line is a long term moving average. Okay, so sorry guys, why I cannot see. Okay. Okay, so the GMMA, they are using two different EMA, in the offer to analyze the market behavior on multiple um um like multiple EMA. Okay, so how do you use it? Okay, how do you use it? Ish. Okay, you can setting on trading view if you are use trading view, or you use MT4 MT5. But I think these are indicator you can find in trading view. So the short term EMA typically set at 3, 5, 8, 10, 12 and 15 day period EMA, and the long term EMA, which is the red line, typically set at 30, 35, 40, 45, 50, and 60-day moving averages. Okay, so you can see that. Okay, and the MMA track the activity of the two major group in the market. So those are investor and trader. Okay. Oh, okay. So like I say, two group of the major group in the market, which is a trader, which is a trader is a short term. It's gonna be a green color line, and the investor, which is a long term, is a red line. Okay. 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 So the trader they are think about short term. That's why we use 3, 5, 8, 10, 12, and 15 day moving averages to identify the entry. Okay, so they're using the green line, and we track it. Okay, we do track investor. We are using 30, 35, 40, 45, 50, and 60-day EMA because the investor they think a long term trend. Okay, let me try to move it. Sorry guys, I don't know why my presentation like another screen is not moving. Yeah. Okay, like say the investor, that take more time to recognize the change in trend, so we track the with investor activity by using those EMA. Okay. And how you find the trend for this indicator, you can use to find the trend, finding trend here for the investor long-term trend, which is going to be the red line, and the trader going to be short-term trend, which is the green line here, which is the arrow you can see in the screen. And the trading plan, actually you can, how it so is that we use this strategy to finding agreement on what value between the two group. Okay. This is okay. So the trader, the short-term trend, they represent, or who are attempt to capture the short-term profit. It could be those like scalper who like in and out the market very often, and like I say, the long-term investor who is more to like more to like take time to identify the trend, so they tend to hold the position longer than the trader or like scalper. Okay. Also you can use the GMMA to find a strong trading opportunity. So how is that as you can see here in the screen. Okay, let me see. Okay, like how you identify that the relationship between the two groups tell the traders about the trend of the market, a change in price direction that is well supported by both short-term and long-term investor. You can see that the investor signal is very strong trading opportunity. So for the GMMA, is a easy indicator, I know, for you to use because it allows everyone to determine the overall trend. So you can see that it's very clear direction if you use this indicator. So you can identify, you can see red and green. It represent trader and investor really clearly. And also it also help you to easily identify on or trend. You can see that the red line is a long-term trend. Okay, it really slope down, and the green one, okay, is a short term. It's a like trader. You can see that it's like pull back to the long-term trend, which is red line. Okay, like I said, the cookie indicator is very easy indicator, like you know, that like help your body to determine on the trend quickly, and like without any personal bias, right? And of course you have to know that how to use it correctly as well. Not only like, oh, you see that, or when the green line crossing the red line, and then you just want to make a short or make a sell order. Okay. Again, here I will show you how to get the easy identify the overall trend. Okay. The GM. Oh, sorry. Why that's okay. Okay. So the GMM also offer the insight into potential or the period that could be consolidation by the signal, or it could be um, the direction of the market. And you can see that the highlight here or in the square that I put on the screen, the reversal, you can see that when the short term close below the long term, which is the red line, you can see that there is going to have reversal soon. And you can see that after it's closing, it's go to the bearish direction, right? The green line cross below the red line. Okay. And you also can identify the consideration here. It's a ranging market, right? When the two group of the GMMA is kind of like cross each other, like here ranging market, you can see that how to identify trends. So I think this indicator is very good, personally very good for identify the trend if you know how to use it. Okay. And also I find this indicator is 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 quite good if you know how to um combine with the price action or another indicator, which is I will talk about it later. Okay. Okay. Yeah. Just now I mentioned price action as well, right? You can use this this indicator combined with the price action or Ichimoku crowd. Okay, I will show it you guys later. And how you can implement or how you can read the GMMA is here. Okay, I show you the real chart. Not moving here. Okay, so the degree of separation, you can see that when the short term moving average is a green line, it's close above and is far away from the red line, which means that there is very strong trend. Okay, you can see that. And then when there is a narrow separation or the crossover, it's going to like have really 10 is weak, or it's going to have like change in trend as well. You can see that. Okay, on my left, let me see if I can use my pen here. Okay, right, you can see that here. So when a narrow separation or crossover, so it's come from the crossover here, go to uptrend, right? And from here it's crossed over. So it's a change trend direction going to downtrend here. Okay, so you can use this indicator, like I say, identify trend. The green line cross above the red line, it's going to go to bullish. If the green line cross below the red line, it's going to bearish trend. Okay. Okay. Sorry guys, why I cannot move my the slide here to okay. Why is that move over here? I'm not so sure why. Okay. Okay. So from here, I just mentioned the crossover. So the crossover of the short term and long term, which is over here, right? The bullish, which I say the crossover here, the green line cross above, it represent the trend reversal. So from bearish, it's going to bullish reversal. So it's go up, and bearish reversal. You can see that the short term close below the long term, which is green, cross below the red line. It's going to bearish reversal trend. Okay. So how is the rangings look like? Okay, it's over here. So if the line is very heavily intersected, is meaning that it's lack of price trend. You can see that when it's ranging or consolidates over here, so it's not a good time for you to trade in the trend direction. You might have to wait for the price to like a big breakout of this box first. Like you can see here, if a price to break out or close below, and then you can make a short from here. Okay, so it's really, like I say again, if you want to use the indicator, you can just go to trading view and then search for GMMA, and then you can try to use this indicator to identify your trend, the market trend. Okay, so how is the long, or you want to buy the position? Like I say again, in here in the screen, you can see that the green here short term is cross above the red line. So it's over here. If you combine with the price action, you can see that this is one of the price action here. Okay, and then there is really big bullish candle over here, and then it's cross above somewhere here. So when it's cross above here, you can just place the buy order over here. Okay, because here it's going to already cross over, and after that you place the buy order here, so you can just put the stop loss over here. Okay, and then you can see that the price is bullish. Okay, and what about the short or sell example? Again, bearish trend. So when you see that the price or the green line is crossed below the red line, which is the short-term cross below the long-term trend. Okay, and you can see that this is a really big bearish candle. Okay, so when it's crossed below, you can just put the sell order over here, and then you can put the stop loss, or you can put at the high here. All right, and then you can see that the price is going down, and then even those like go up and then retrace or pull back at the support area. Okay, and then it's continue going down. All right, like again, if you want to put the short or the long, you can put as long as like the price is not go beyond the long term. Okay, it could be go up here and touch it, and then you can make another sell order here. Okay, and just make it down, but cannot go above the long-term trend. Okay, if you want to put the sale order, right? And again, like I mentioned, that there is very a strong trend over here, because you can see that the separation between these two is really widen. So this very strong trend. Okay. Short. Okay. Okay. Back out. I just mentioned. Okay. Back out from consolidation here again. The separation is really widen here. A very strong trend, and then you wait for the breakout just now, right? The green line cross below the red line. Okay, and then I you say it's really strong downtrend. Again, you place the sell order here, stop loss here, and then you can see the price is go to downtrend. So I think this is one of the indicator for me personally to use for identify the trend. Okay. Okay. Mm. Okay, I have another example of the like long or buy position. For example, here, let's say you already enter the order, like the buy order over here, right? Because you saw that there is a crossover at this area. Okay, and then you can see that you want to add more position. Okay, you have to identify a file that there is no crossover during the trend. There is no crossover, right? And then when you see the price is going until here, okay, and then you see that the price is pulled back to EMA short period EMA over here, and then you can put the buy order more if you manage your lot size very properly, or if you are not over trade, you can put more buy order over here. Okay, and you can see that the price is react to short term moving averages here. Okay, so this how you want to add more to like buy position. You can see that, right? So when the price it touch or react to long term over here, you may exit the trade, because there is potential for price. Okay, from here you can see the price is changing already. So if you see like that, you might have to exit the trade. Okay, just close the trade and then exit, and then you come out of the market and see again where you can find the opportunity to enter the trade. Okay, for the short term, you can, oh, no, let me see. Okay. Wait, sorry, why is like that? Back out. Okay, for the sorry guys. Okay, for the chart example here, again, you see that price really close or below the long-term trend. Okay, and then you have a chart over here, and you can see that the price is a pullback. Okay, here pullback. You can add another order here, go down. Okay, pull back. You can add another like sale order over here. Okay, you can see that here, pull back. You can then you make another order over here. Okay, as long as the price is not go beyond the long-term trend, which is the red line, then you can add sale position. if you manage your lot size properly. Okay. Okay, so there's a tip for for you guys how to use the GMMA is that when is the like how you determine the really strong trend, which is the distance between the red and the green moving averages here, okay, which is a circle over here. Okay, this is like I mentioned, it's very have a strong trend direction. So this is gonna be downtrend. You can see that, right? And then the separation is wider from each other, is far away from each other. And one thing is that GMMA is, let me see, is act as support and resistance. Okay, so how it works that you can see that when the price, maybe make is the example over here, so you make a sale, right, and then you see that price is coming down and then it's reverse. You can see that this is act as a resistance, acts as resistance here. Okay, so this is one of another, they act as upon resistance. What is about the support here? You can see that price is on uptrend, it pull back to the long-term trend. Okay, this act as support and then it's pull back, resistance, and then this one pull back to resistance again. Okay, it's act as support. Okay, this is also act as support level. Okay, so you can use it to add more position or exit your trade as well. Okay. Okay, so how you can improve it, right? I mentioned that you can combine with price action or Ichimoku crowd if you know how to use it. Let's say in the screen you filter out, you use like just want to get a confirmation that is this going to the correct trend direction. So you pull out the GMMA right here. Okay, and then you see that there is a crossover here. So it's going to change direction to the bearish reversal right here. And then you can see that price, short-term cross below the long-term, which is green cross below the red line. Okay, and then you can see that price going down, and then you also can see that price also below Ichimoku crowd here, meaning that price is on downtrend. Okay, so you can use these two indicators to this to find the trend direction or like to help you to get a confirmation or confluence. Okay, so these two, you can use this to identify the trend. And then another one I'm using, you also can use like price action. For example, let me find the example over here, like price action. Okay, for example, like if you know how to draw like support and resistance, right, you can see from here. Okay, draw here. This one is already overlap resistant, right? So this used to be resistant. Okay, and then it's breakable resistant, and then now act at support. Okay, from this level you can see that price is going up and then pull back here to resistance level, which is you make a line here, and then it tested as a short-term moving average, and then you can see that there is have a big bullish candle over here. Okay, and then you can, from here, after it's closed here, you can place the buy order over here, and then you can see that the price is keep going up. Okay, this is like one of another indicator you can use it. And again, GMMA is a standalone indicator. So as you know, EMA is lagging indicator. So if you want to wait for the price or to the EMA to cross over, for example, I just go back to this one. Okay, like the price to cross over. I just want to buy the clear. Okay, if you want to wait for the price to cross over right here, it might take quite a long time for them to close, and then you may miss the entry as well. So you use this one, use this indicator combine with maybe your own indicator, or you can combine with Ichimoku crowd together with price action, and then you can get a good entry from there. Okay, all right. So I personally use GMMA just to identify trend. So okay, let me see. All right, guys, thank you so much for tuning in today and tuning for the webinar today. Okay, let me know if you have any question. Okay, I will end the webinar soon. I think they have a recorded, right? If you don't understand any part, you can just go back and watch it again. Okay. I'm not sure why it's not moving at all. Okay. Okay. All right, guys. Thank you so much, guys. Thanks for joining. Hope to see you guys again, maybe next section. Okay. Have a good evening, or have a good morning, a good afternoon, wherever you are. All right. Thank you. Bye. Bye.